Hello and good morning. I'm Ethan Feller from Zacks Investment Research. I hope you had a good weekend. Today on Momentum Monday, as usual, we are going to go over last week's action in the market. Then we're going to take a look at the economic calendar to see if there's any important data releases or news that we want to be ahead of. And then I'm going to show you 3 technical trade setups in stocks with top Zacks ranks. So first things first, we are going to take a look at the action in the broad market last week. So this is a chart of the S&P 500 that we've been monitoring since we started this video series 2 weeks ago. We can see last week, we can see Friday, we had a really strong move higher, and the beginning of the week was pretty strong through Wednesday, and it looked like things were moving well. But the action abroad with Israel and Hamas, it looked like maybe things were picking up a bit. Uncertainty was rising into the end of the week, and so we started to sell off on Thursday and Friday. So I added this sort of wedge setup here, and I thought it was pretty good setup to see S&P go higher. As I've been bullish since we started here 2 weeks ago, and I remain bullish even with the uncertainty abroad. It's really good to see this level hold here, 43.30, and the markets have gapped a little bit higher this morning now that the markets are open. So nothing that happened abroad was enough to bring the markets down. So yeah, I'm cautiously but definitely bullish above this 43.30 level, and I have no idea what's going to happen abroad. Of course, nobody does. Hoping for the best, hoping that things don't get too wild and don't we don't start a full-on war, but we'll see. As for Nasdaq, this is really what we've been watching. I use this as my favorite proxy for the market, and as momentum traders, we're looking for leading stocks, and a lot of the leading stocks are in the Nasdaq. So we can see we've been watching this level here that held since the start of the series 2 weeks ago, and we moved higher. We really nearly got to the top of this range, and then also on the Nasdaq, we can see Thursday and Friday the market took some heat and sold off a bit, but we're still right in the middle of this range, and I see this as a setup for a bigger move higher into the year end, which is why I am keeping my eye on these leading momentum stocks. And I'm just going to take a little bit of a longer term look here. So this is a weekly chart. Get rid of this. I just see this as a big bull flag. And I think once NASDAQ can get above 15,350, I think we have a broader market breakout. And I'm going to share the stocks in a bit that I think are going to really carry the market higher. Another thing that I want to note is the oil market. Oil has obviously been really strong since this summer, but starting about 2 weeks ago, after the market traded above 90, traded up to nearly $95, we got a hard sell-off. You could say that probably this part of the sell-off was maybe speculative traders that got into the trend a little bit late, getting burned. But interestingly, last Monday, the oil market gapped higher, not surprisingly, because of the rise of tensions in the Middle East. However, through the week, it mostly faded, and it was surprisingly weak considering everything that's happening abroad. I mean, when tensions flare in the Middle East, it's usually quite bullish for oil. Namely, Iran, who's sort of the leader of this proxy battle. If potentially we were to take their supply offline, it would create a supply imbalance, and we would see oil prices go higher. So then we can see Friday there was a huge day in the market. Oil prices traded nearly 6% higher. Not surprisingly, traders were hedging into the weekend, but there was no follow through yet. So again, this stuff in the Middle East keeps things in the market pretty tentative. I think without, obviously it is happening, but if it weren't happening, I would bet that I think oil might continue to roll over. Maybe it's forecasting an economic slowdown, maybe a quarter or two out. I'm not exactly sure, but the market clearly got weak, and if if these tensions abroad can't keep it higher, this should you would expect oil to be over 90 by now. At least I would, and would be gunning for 100 if we were to expect this this conflict abroad to really get worse. But again, it's just something I'm monitoring, and I'm going to be watching the oil market really closely. And on that note, we have a handful of energy stocks that are in the top Zacks rank. And if you see some in there you like, I mean, it's probably a pretty good way to maybe hedge against potential volatility going forward. But I didn't really see any that fit our momentum kind of trade setups. And I saw a few of them that looked pretty extended, actually. So a lot of them rallied pretty good on this Friday action. Of course, if things get crazy abroad, oil market will probably rally, and these stocks will stay extended for a long time. They'll be overbought, and they'll continue to be overbought. So I'm not going to highlight any oil stocks today, but they could be a good trade. If you see something you like, you go for it. I just don't see them any good technical setups. So that's the broad market. Now let's just take a quick look at the economic calendar. It's a pretty busy week. There's a lot of action, a lot of speeches, a lot of data releases. I'm not going to go over everything here, but it looks like I think there's a series of speeches coming out of the New York Economic Club. We can see we got a lot of Fed speeches: Harker, Bowman, Barkin, Kashkari, Waller. And then on Thursday, Powell speaks. So, we'll see. We'll see what happens there. He's pretty good at managing his words and his rhetoric. So, we don't know. We'll see how he leans. But going into last week, we began to see more dovish action, more dovish speech, and more interest rate cuts start to be priced into the market for next year. As for data, I would keep an eye on U.S. retail sales tomorrow morning. And then initial jobless claims. Those are the two big ones for me this week. Jobless claims is something we've noted every single week. We're still waiting for some kind of upturn. We're not waiting, but some sort of upturn above 250,000 we could finally begin to consider maybe that we're going to have a recession next year. But until then, there's really no reason to expect it. 200,000 is a secularly low number. So, yes, we're keeping our eye on that data. And yes, also after this week, the Fed speakers, they go into a blackout period, and they are not allowed to speak publicly on markets until the FOMC meeting, which is going to be November 1st. And let's do a very brief look. So markets are pricing in a 92% chance of no rate increase. And so people aren't expecting any more rate hikes. We'll take a quick look at this. If you never looked at this, this is the Fed Watch tool from CME. And this shows us the probabilities of rate changes over the next year. So we can see starting in June 2024, the market is starting to price in cuts. And you can see there's 3 cuts priced in for 2024, which is a more dovish expectation than there was 2 weeks ago, in which we only had 1 cut. So 2 weeks ago, the expectations were 1 cut in December. So kind of a big change, and it's good for the market. Okay, so let's move on to the technical setups. So because the market has been people were bearish into the end of the week last week, but a lot of the stocks broke out really nicely. And a few of the stocks that I shared on here have moved significantly higher. So instead of picking brand new stocks and just for the sake of looking for breakouts, I'm just following these ones here. And a lot of them have some nice pullbacks from their breakouts. So Amazon was one that we noted last week, I believe. And it's still in the top in the Zacks rank one. Amazon has huge earnings per share forecasts over the next 3 to 5 years. the best, really, of any of the big tech companies, and it's just a great company. So let's look at the stock. Okay, last week we noted this descending wedge. We got a nice clean breakout above 127, and the market moved higher. So again, like we noted last week, there was this weakness into the end of the week, but I still, because I'm still bullish, I think that this is a pullback in an uptrend, and I think we got this breakout, pullback, and I think another move higher is coming, and I think 140 and maybe probably new highs for the year by year end. So yeah, it's pretty simple. Just a pullback in an uptrend. Not a breakout trade here. We had the breakout, so all right, we're gonna move on. Copart was another one that I covered in the first week. Top Zacks rank, and it's actually the number one industry in the industry Zacks industry rank, which is pretty interesting, and it's been there for the last 2 weeks. If you're not familiar, Copart is a car auction company, the leading one in the country. It's got something like 40%, 50% market share. And so 2 weeks ago, I noted this technical setup. All right, got a pennant here. Noted this level, 44, 44.30, something like that. And we broke out from there. Got a nice strong move. And again, it was pretty weak in the market. I mean, some stocks were really rolling over, and this one, Copart, just a little tiny pullback. And maybe it pulls back a little bit more, 45 or something like that. But this one I definitely like on a pullback. Got a clean breakout. It's got clear relative strength against the market. It's got top Zacks ranks, leading industry. So Copart's got a lot going for it. Maybe a pullback to 45, or maybe this was enough of a pullback for you. But I definitely see new highs soon, well before year end, maybe within the next few weeks. So Copart is another one to keep an eye on. And Dell Technologies. This was another stock that I noted in the first week, 2 weeks ago. Top Zacks rank. It has a style score in all four Zacks categories: value, growth, momentum, VGM. It's got a very reasonable valuation, 11 times forward earnings, nice earnings per share forecasts, and it's got a lot going for it fundamentally. So let's take a look at the chart. So Dell, another one we noted 2 weeks ago, this really tight bull flag here. It didn't break out until late last week, so it took another week to break out, and it sort of traded down, got this reversal, and it traded right back in the range, which is an encouraging move. Clearly, when you see something reverse like this, as soon as the market traded lower, buyers were jumping on top of it, buying. So couldn't even hold down there through the end of the day. So for me, that's a bullish thing. This thing extended lower, and we got a breakout last week. And now we're pulling back to the breakout line. Again, I like this as a pullback in an uptrend, pullback from a breakout. And I think this one, again, as long as the market holds up, as long as tensions don't get too crazy abroad, I see this one again making new highs within the next few weeks, definitely before year end. So one more thing I want to note, not breakout style, but an interesting development in the market was this XLP. The consumer staple sector got absolutely wrecked last week or over the last 2 weeks. A lot of these are what you would consider defense stocks, something like Coca-Cola, Procter & Gamble, Pepsi, Target, sort of retail and consumer staples. So because interest rates got pushed up so high, a lot of investors dumped their holdings in these stocks because they're very consistent. They pay nice dividends. But now you can get 5% holding a treasury bond, or a treasury note, or shorter term paper. So a lot of players got out of these. But this is a long term chart, and we can see XLP came down to this sort of interesting level of support. I don't know if this is necessarily a bottom, but I wouldn't be surprised to see some of these stocks put in a short term bottom and maybe make a nice reversal, sort of a mean reversion trade. So there's a handful of stocks in this one that are worth keeping an eye on. None of them actually have top Zacks ranks, not surprisingly, because the sector is not doing great. But me personally, I like to look for stocks with relative strength, and Costco, I think, is actually one of the best companies in the country. Is one of the best stocks in the market, and you're getting a nice little momentum set up here. Nice, you got a clean breakout level here, and it's actually sort of Costco actually gapped higher to this morning, and again, it's not a top Zacks rank, but it's something worth keeping an eye on. I just thought that was an interesting development in the consumer staples market. That's all for today. I hope you found this content informative. If you want more, please like and subscribe to Zacks' channel. And if you want more information about Zacks.com, sign up for the promo in the description below. And I hope you enjoyed it. Thanks.